doesn't. So welcome to the Audit Committee meeting. We'll start off with apologies for absence.
Thank you, Chair. We only have apologies from Councillor Bridgewater. Thank you.
Thank you. Item number 2 on the agenda is declarations of interest. Just to remind members to declare any personal or disclosed to be pecuniary interests, including the nature and extent of such interest that they may have in any items to be considered. Does anybody have any interest to declare? No. Okay. Moving on to item number 3, which is items requiring urgent attention. When we had our last audit meeting, there were a few issues concerning health and safety, and I did ask for an update to come back to this meeting, but we actually omitted to put it on the actual agenda. So I've asked Ian Luscombe if he can give us a quick update. Ian's with us, I believe.
I am, Chair. Good morning, and good morning, members. I've just prepared a quick verbal update for you, members, and I'm happy to take any questions that obviously might follow that. With reference to the audit in July 2019, the health and safety team continued to ensure that health and safety systems have been put in place and are being followed. Good example is the accident reporting and the incident reporting systems that we've set up. And we're also ensuring that managers themselves are taking responsibility and ensuring that staff are following risk assessments and safe systems of work. Now, a review of the risk assessments for the majority of work activities that our staff are carrying out, obviously with public safety and staff safety.
Sorry to interrupt you, Ian. It's Mark Renders here, Councillor Renders here. I'm struggling to hear you. You're breaking up a bit. I don't know if that's a technical problem or if it's just me.
That's breaking up with me a little bit.
It is it? Okay.
Okay, I'll try and speak slow and clearly for you. Hopefully that will help, and apologies for that. So COVID-19 has prompted a review of the risk assessments for the majority of work activities, with staff and public safety being of paramount importance. Open safety has been front and centre in the Council's thoughts and response to dealing with the outbreak, and taking on a major significance in dealing with infection control and the importance of keeping staff safe. And I do believe that this event has really driven a positive cultural change towards improving health and safety standards and maintaining health and safety standards in the Council. The work plan, which was mentioned for higher risk activities, is still in place. Many of those high risk activities take place in Southampton, where they've got Salcombe Harbour, for example. With regards to the workplace inspections that we do, some of those have stalled due to COVID in terms of staff availability to do those. Those are inspections done by competent people who aren't usually in that place of work. But what's happened is the managers in those workplaces have themselves been extra vigilant, obviously for infection control purposes, but also making sure that health and safety standards, which are already in place, are being followed. And as I said before, the vast majority of activities that we are carrying out as a council have been reviewed to ensure staff safety in general, as well as that extra focus on infection control. Finally, as we return to a new normal, we will continue to review how some activities may have changed and ensure that we are continuing to risk assess those activities and ensure appropriate controls are in place to protect staff. Are there any questions, please? And I hope we could hear that last bit a little bit more clearly.
Do we have any questions, members? Doesn't look like it. So I think we could hear you in the end, Ian, I think. So a bit patchy, but we got there. I mean, one of the thoughts I had was about the first aid training, but I appreciate we can't do anything about that at the moment until sort of life returns to some kind of resemblance of normality, doesn't it?
So with regards to first aid training, what we do is a first aid risk assessment in terms of the provision of first aid, and that relies on the occupancy of your major buildings. So clearly, because the occupancy is reduced, then the requirement to have a number of first aiders in that location is lessened. So we've got a number of people whose first aid qualifications are still up to date. I think also the government have given some concessions, a little bit like the concessions for the MOT on your car, that you don't have to do retraining for an extended period of time now. So I believe that we are still compliant in terms of our provision of risk of first aiders, and that we are covering the need that we've currently got.
Okay, thank you very much. Yeah, okay, well, thank you for that, and thank you for joining us.
Pleasure. Thank you.
Okay, so we move on to item number 4, which is confirmation of the minutes of the meeting held on the 23rd of June 2020. These have been circulated. Is everybody in agreement with these minutes?
Yes.
Yes.
Yeah.
Yes.
Okay, we'll take those. I should have actually said it's easier, but actually people don't just agree, isn't it? So, okay, we'll accept those, the confirmation of the minutes. So we now move on to item number 5, which is a draft statement of accounts 2019-20 and draft annual governance statement 2019-20, introduced by Councillor Edmonds.
Thank you, Chair. The report presents the draft statement of accounts and annual governance statement for the period for the year ended the 31st of March 2020. These documents would normally be published before the end of May, but due to the COVID-19 pandemic, this requirement has been extended to the 31st of August. Full details of the Council's accounts can be found at Appendix A. The annual governance statement is shown at Appendix B, which sets out the requirements of delivering good governance in local government, including a self-assessment of the extent to which the Council complies with the 7 core principles of good governance. Page 149 of your agenda papers sets out the significant governance issues for the year in 2 sections. The first covering the 11 months of the year to the end of February 2020, and the second section covering March 2020, which focuses on the impact of the COVID-19 pandemic. Members will have noted the underspend of 133,000 in 2019-20, thanks to the finance team's prudent management of the Council's finances, and also very timely, as members may decide to use the underspend towards this year's projected budget shortfall, which currently stands at 501,000. Capital expenditure included residential renovation grants and refurbishment of assets and the purchase of land at Wonacutts Road, Oakhampton. Section 4 of the report contains an important narrative regarding the valuation of the Council's assets as a result of COVID-19 and confirms that an amended budget for 2020-21 will be presented in September, with an amended medium-term financial strategy to follow in October. Member budget workshops will be held in August. Grant Thornton will audit the accounts during June, July and August, with the statement of accounts brought back to this committee for approval in September. The health crisis has had a major impact on the Council's operations during the last few months, including its finances. I'd like to thank the finance team under the leadership and guidance of Mrs. Buckle and Mrs. Henstock for all their hard work and commitment in dealing with the year-end close down and preparation of accounts during this extremely difficult time. Mrs. Buckle and Mrs. Henstock are on hand to provide further comment on the draft accounts. Thank you, Chair.
Thank you, Councillor Edmonds. Do we have any questions?
Mike, probably a good time for me to step in to say where we are with the audit this
Okay.
point.
Yes, please, Steve.
Just to say the audit is underway. We've been looking at the drafters. We had the statement of accounts obviously beginning of last week, but we had pre-draft figures to make a start on. It's going fine. It will be slow progress. This is the first time we've undertaken the audit remotely like this, but it's working. I'm sure Pauline and Lisa would back me up on that quite well at the moment. We're having weekly progress catch-ups between the auditors and the finance team, and we're using an audit log to track queries and responses to queries through the audit. our experience, we've now completed the NHS accounts on this basis. We had an extra month to do the audit, and it did actually take a lot longer than we anticipated. This way, it's surprising how much time not being on site adds to the process, but we have plenty of time put aside in our plans to get the audit done, and we are aiming to be off the audit by late August. So the September audit committee is looking good at this point in time. One thing I would pick up, as mentioned in the introduction there, the valuation of the council's property, plant, equipment. The valuers have been, if you like, mandated to put a reservation, a material uncertainty into their reports over the valuation at 31st of March because of the circumstances around COVID and the lack of market data that was available. It is referred to in the accounts under that valuation section, but it will result in us putting a limitation of scope opinion in the audit opinion when it arrives. Now, it's not a qualification. What it does is refers to that material uncertainty raised by the valuer, and just highlights the fact that there is that element of uncertainty around the valuations. It will appear in 100% of local government opinions. It appeared in 100% of NHS trust opinions, where they have valuation of properties also. It's just one of those things that under the circumstances of COVID, there is material uncertainty over that valuation at 31st of March. So that, I thought it was probably an appropriate time to raise that. Don't want the limitation of scope in the opinion to be a surprise at the end of September. But it's almost 100% certainty that there will be a limitation of scope in the opinion this year.
Okay, thank you. There's no questions come up, but I've got quite a few questions. So, and some of them are comment really, and some of a mixture of both. So I'll rattle through them actually. And the first one, as Steve's just spoken, I'll probably bring this one up first. Probably refers to Lisa and Steve Johnson. It was on page 96, and actually I should have said at the very beginning, actually, when we refer to page numbers, because obviously the accounts have their own page numbers, then the agenda has its own page number. If we refer to numbers, if we refer to the larger agenda, the larger number, which is the agenda number at the bottom of the page, then we should all know where we are. But on page 96 of the agenda, in section 3 of the notes, it refers to the MacLeod judgment, and the implications on our pension scheme. Lisa, could you explain this to us?
Yes, certainly, Chair. Thank you. Yes, so the best place to look is on page 96 of the agenda, and it's section 3, notes to the accounts. So what happens is on an annual basis, the actuaries who are actuaries of the Devon Pension Fund, that's Barnett Waddingham, do an actuarial valuation at the year end. And on page 96, they've set out their a presumption. So what they've said is their presumption is it could have, the MacLeod judgment could have an indicative impact on West Devon Borough Council, a potential increase in pension liabilities of 230,000. So that equates to 0.5% of the total pension scheme liabilities. And obviously that's based on certain estimates. So what they've estimated are things like that assumes that salaries increase at the rate of 1.5% each year above CPI, in addition to any promotional scale. And they've also set out a sensitivity analysis on that. So that's the that statement that you see there on page 96 directly comes from Barnett Waddingham, the actuaries of the Devon Pension Fund, and we just take their statement and copy that into the account. So that's their professional opinion of what the impact could be on the pension scheme liabilities.
Okay, thank you. So my follow-up question then is to Steve Johnson from Grant Thornton. Based on the report that's done by the actuaries, are Grant Thornton planning to do any more work in regard to the McLeod judgment, or are you just happy with what the actuaries are recommended?
No, we obviously we've seen that report and we've already started our work on the pensions at this point in time. We're happy that your actuaries have built the outcome of the McLeod judgment into the valuation at 31st of March. So that's incorporated. You'll remember right at the very end of the audit last July, when the McLeod judgment was actually made, there was a last minute assessment of the impact on the accounts, which was unadjusted and was not material. That has now been adjusted in the valuation, so it's taken account of in the liability that's in the accounts, and we're happy with that approach. The what it's laid out there is the uncertainty around the actual valuation, so they've added a bit of sensitivity around should it turn out to be 0.5% different, that will make £230,000 different to your liability. So they've made a best guess estimate in the liability, and we're happy with that approach. If they hadn't, and there is one actuary that does local government pension funds that has not built it in to the liability, and if that had been the case, we would have had to do some additional work.
Fine, thank you very much. Okay, Councillor Vashon has a question.
Thank you, Chair. Yes, relates to depreciation. Going back to page 122 on the agenda, I noticed that we depreciate buildings, which has a useful life of 60 years. I'm just wondering why is that, and buildings tend to actually appreciate over quite a time, and does that also apply to investment properties?
Yes, thank you, Councillor Vashon. If I deal with investment properties first, and then I'll go on to the buildings. So investment properties, that's set out, we've got a separate note on the investment properties, which is on page 70. So investment properties actually have to have an annual valuation, so that's carried out every year. And on page 70, you can see that the valuation has changed, so it's gone from being a value of 20.13 million down to 19 million. So that's a net loss from the fair value adjustment of 1.1 million. There isn't any depreciation charged on investment properties, but there is that annual valuation, and the movement in that valuation, it's not a charge to the general fund, so it's not an impact on the council's bottom line, if you like, because those adjustments in the fair value valuation are reversed out through the capital adjustment account. So that goes through the movement in the reserve statement. So there is those investment properties are annually valued. There has been a 1.1 reduction in the value, but as I set out, it's not an impact on the council's bottom line, because that just goes through the capital adjustment account and is reversed out through what's called the MERS, the movement in reserve statement, and there is no depreciation on investment properties. Going back to page 122, we set out there our policy for the useful life and the depreciation basis, which is calculated on a straight line basis for each of those buildings, infrastructure, vehicles. Buildings, we do say, have a useful life of 60 years. Infrastructure, we're saying 20 years. Vehicles, we're saying 7 years. And IT equipment generally over 4 years. Those don't require an annual valuation in the same way that investment properties do, but the whole portfolio does have to be valued on a 5-yearly basis. And any changes in valuation, so if there's capital appreciation on any of those assets, that actually goes through the revaluation reserve in the council's accounts. So they are slightly different, sort of normal plant property and equipment and investment properties, and they have slightly different treatments. So there is depreciation on those assets, but there's no depreciation on investment properties. I hope that helps to explain.
That's excellent. Thank you, Mrs. Buckle. Thank you, Chair.
Thank you. Councillor Renders has some questions.
Oh yeah, I did miss quite a bit of this actually. I disappeared completely, and Steve was talking at the time, and he was just about to go to one of the questions that I had on my list here, and I lost it completely. So I apologise to everybody if you're going to have to repeat something.
That's fine.
I must have been gone for a good 5 or 6 minutes, you know, and I didn't know whether or not it was shown. Because last time this happened, it didn't show that I wasn't there. I think in the last meeting that we had. So I'll have to get Mr. Gardner to have a little look at our supervised case. There might be a problem with my system. But anyway, back to I digress. Here we go. What have I written down here? One was about valuations and assumptions. I was reading in that obviously given the current climate that there was an assumption to be made, and one of the notes said that it would be based when new data would be available. And my question to Steve was, obviously this affects the accounts. When do we anticipate that will be available? I haven't got again, because my system's gone a bit funny, the accounts on the back of the screen at the minute, so I'm referring to notes rather than the actual page. But I think there was an IS number or something that was it referred to, or something 19, and that would change when we got new data. And you were so.
Yeah, the IS 19 is the pensions.
Oh, it wasn't that. There was some number though to do with an assumption on valuations. But as I say, off the top of my head, I can't remember what it was. But
the valuer they've been obliged under the RICS guidance this year to put a material uncertainty in their valuer's report over the values at 31st of March. This is because of the COVID and the uncertainty around how that would affect prices and the markets. Because of that, we will need to put a limitation of scope into our audit opinion. It's not a qualification. All it refers to is the fact that there is a material uncertainty. We will have done our work on the valuer's estimate, and I'm sure we'll be comfortable with the way they've gone about calculating the values in the accounts and the consideration of any impairment. However, because there is an uncertainty over market prices and market data, we will need to refer to it in our opinion. So all local government audits will likely have that limitation of scope opinion in the audit opinion, as did all NHS trusts. So it's fairly routine, and it's not a qualification of the accounts. Obviously, we do look at what the valuer has got to say, and if there are any changes to that position, then obviously we would need to take that into account as well.
Okay, thank you, Steve. Right, am I allowed another question, Chair?
You've got as many questions as you like.
Oh, okay. Okay, what have I got here? Page 77 to 78. It was a question about, and it might just be not understanding this, and it was about shared services. And I wrote down shared services. Is this the whole amount or just our half? Because there was another note which confused me on the following page, and it mentioned the fact that we'd had given an amount across to South Hams, and we'd also received an amount across, and it just confused me slightly whether or not the figures that were shown in our accounts, are they what we've paid, as in the officers' salaries and things, or is that just half of it, and is the other half in Southampton's account? Does that make sense? Lisa, probably. I don't know.
Yeah, yes, I'm happy to answer that question, Councillor Renders. Thank you. Yes, so the way we do the shared services, so a member of staff is either employed by one council or the other. So depending on the which council they are employed by, so if I take myself as an example, I'm employed by West Devon Borough Council. So in the officer's remuneration note, my full salary will be shown in that note. Because I'm employed by West Devon, but half of my salary is recharged to Southampton District Council, and Southampton pay for half of my salary. So what we do is in the officer's remuneration note, we show the salaries of any of the staff which have a remuneration over 50,000 in that note, and then there's some text at the bottom saying how much of the officer's remuneration has been reimbursed by Southampton District Council. So that's the figure that's shown in the note. So the note for the officer's remuneration shows the full amount of the salary, but then in the accounts, obviously, that reimbursement from Southampton has been taken into account. So in our income and expenditure account, it would only be half of my salary, and that's the same for all of the staff which are shown in the officer's remuneration note.
I didn't know if it was shown. Sorry,
so if a member of staff is employed by Southampton, then the reverse would happen. So if you had West Devon's and Southampton's accounts side by side, you would see that the reimbursement figure from Southampton's would show exactly the same figures would show at the bottom of the note. So it would say how much Southampton paid West Devon, and in West Devon's account, it would say how much Southampton have contributed towards those salaries.
Brilliant. That's what exactly. Well, it was what I thought, but yeah. I thought I just better reiterate. So that would then be shown as I haven't got the notes in front of me. It was something like 400 odd thousand. That would then be shown as revenue in our accounts, wouldn't it? Is that how it's shown?
Yes.
Or just to note it out, otherwise they wouldn't balance, would they?
No, that's right. Yes. So only the in the income and expenditure account, only the half of the amount of salary would impact on that income and expenditure account, because the other half would sit in Southampton's.
Okay, the other one I had was depreciation, which was covered under Paul's question. One, just to say, I've been dealing with accounts for a lot of years now, not always on this scale, but I will say a massive pat on the back for this, because I found it very easy to absorb. I understood it fully. I know it's only a snapshot of what happened historically, and we've got a lot of harder things to come ahead, but I just wanted to reiterate what was said at the beginning about how well you've done as officers. And just on a lighter note, I did have another point, which was a bit embarrassing. I took this to bed late at night, and whilst reading through this, I noticed an item in the accounts on page 42 that said maternal items, 32,000. Now, I will say this, it was late at night, it was about 11 o'clock. And then on rereading the following morning to re-ask the question, I realised it said material items. So we weren't out buying dresses and goodness knows what else. And I've deleted that question, but it did make me smile to myself afterwards. But thank you for your time.
Thank you very much, Councillor Renders. I will pass your comments on to the finance team. Thank you.
Okay, there's no more questions come up so far, so I have to go back to my list of questions. On page 28, which is in Appendix A, it's the support to community schemes, which is basically our councillors' locality budget. There's 31 councillors, and we have £500 each. That's £15,500 should have been spent, but we only spent £9,300. So therefore, there was £6,200 didn't actually go back into the community. Didn't go into the community. How are we checking on this in the future to make sure that councillors actually are using their locality budgets, Lisa?
So in terms of that, there is a future report that's going to go to the Overview and Scrutiny Committee. If there is an underspend in a particular year, we do roll that amount forward for members to use in the next financial year. The only time that we wouldn't do that is when we got to the end of the fourth year term. So if it's in year 1, 2 or 3, we can roll forward those unspent balances. And I know that the Overview and Scrutiny Committee have asked to see a report showing where all of those amounts have been spent. Pauline, did you want to just come in on where the underspend will show?
Yes, of course, Lisa. So just to confirm that when we close the accounts, we calculate the amount that hasn't been allocated, and that gets transferred to one of our earmark reserves called the Localism Support Reserve. So that money won't be lost. It will be rolled forward to this financial year and further financial years if required.
Thank you. Okay, something else I was going to mention was the on page 14, which is the narrative statement, Appendix A, which is the leader's introduction. The leader is with us this morning, and I think he just, but I'm going to say actually, it does emphasise that the Council declared a climate change and biodiversity emergency, and I would like to propose that we add 2 items to that, as long as the leader's happy with that. That we add that we actually have a declaration action plan which was agreed in December 2019, and also that we signed the Devon Climate Change Declaration on the 23rd of July 2019. Councillor Drew, would you be happy with that?
Thank you, Chair. Yeah, I'm very happy with that. I think it's a very welcome addition and does help to clarify and improve that point. So I'm grateful to you for that, and I would be really happy to see that included.
Chairman, if you would like a seconder, I'm happy to second that.
Thank you, Councillor Ball. As long as the leader's happy with that. So it's basically what I'm looking for. Is anyone like to make comment? They're not happy with that.
Happy with that.
So okay, then we'll include that one. Okay. Thank you much to the leader for that one. Councillor Yelland has a question.
Thank you, Chairman. My question actually was relating to the localities that you referred to just now a few minutes ago, about the members having a locality fund. I mean, last year was the first year that I'm aware of that West Edinburgh councils had actually had a locality fund, and I thought it was only for a one-off. I thought it was only for last year because there was an underspend on the TAP funding. So is it intended that this locality fund for West Edinburgh councils will continue? I know Southampton have had one, but we've not generally had one to my knowledge. So is this actually going to continue?
It's my understanding that it does continue. We have £500 per annum each, and that if you have an underspend of your personal allocation, then it gets carried forward and ceases at this end of the 4-year term. Is that right? Who am I looking to now? Is it Mrs. Henstock?
Yes, that's correct. That's correct, Chair. Yes.
Sorry. Thank you, Lisa.
To answer Councillor Yelland's point, yes, we have got that members' locality budget for 2021, and I think the hope is that we would also have that for 21-22, and for the 4-year term of the council. So obviously that will be a consideration for members as part of the 21-22 budget proposals. But I think that's probably the aspiration that fund would continue.
May I just have a supplementary then, Chairman?
You can, yes.
Yeah, I was just going to say it's more a comment really, but I think perhaps that members need to be told. I've advised of that, especially people who were previously members in the previous administration, so where we didn't have access to that fund. So perhaps I would suggest that perhaps the longer standing members may not necessarily realise that that is being carried forward, because I certainly didn't. I thought it was just for last year as a one-off thing.
Yes, thank you, Councillor Yelland. We can certainly make that clear, Mr. White, can't we, when we put the report together for overview and scrutiny, and perhaps we could send a message out to all members, just reminding them of that fund as well, that money is there to be able to be spent.
Very, very much so, Chair. Thank you, Lisa.
Thank you.
Thank you. Something else I was going to point out, again, going back to climate change, Appendix A, number 37, which is on page 25, it just talks about our response to the climate change and biodiversity emergency. It doesn't really say what we're actually doing about it. I just wondered whether it's worth us adding that we do actually have a cross-party working group which meets regularly to sort of look at our position as a council.
Yes, certainly, Chair, we can certainly add that in on that page, and if that's captured in the minutes of the meeting, we can make those adjustments, and then the audited accounts will be presented back to the Audit Committee in September, along with the report from Grant Thornton, and it's that at that point members would be asked to approve the audited statement of account. So there is time to make adjustments in between these, which are the draft unaudited accounts, and the audited accounts being presented back to the Audit Committee in September. Okay,
thank you. One more question I have, which sorry, I haven't actually mentioned it to you before, Lisa, was I'm trying to find the page desperately, but we do have a dormant company, don't we? Can you just explain that one to us?
Yes, we do, Chairman. That is Servco, which was set up back in 2014 now, and we have filed with Companies House dormant accounts for Servco. I think the intention is that we will review that company during this financial year, and either bring back a report to members proposing a new use for that company, or if we feel that it's not going to be used in the future, we would recommend dissolving that company. But at the moment there have been no transactions going through Servco. It is a shared company with South Hams District Council. So yes, we will look at Servco during this financial year.
So on that, we'd have very minimal costs, wouldn't we? Because we just have your time to fill in the online report and the online filing fee, which if it's divided between us and South Hams District Councils, nothing at all, is it really?
That's right, Chairman. So I think it takes me half an hour a year probably to file the dormant accounts, because we just go onto the Companies House website and just fill in things like how many shares has it got? It's got 2 shares, and just confirm that there have been no transactions for that financial year, and that files the dormant accounts. We also have to do an annual return, which our legal department complete, which again it takes about half an hour every year. So yes, there's minimal cost to Servco.
Okay, thank you very much. So do we have any other questions? Doesn't look like it. So just trying to find my agenda. Yeah, so on page 5 we had page 5 of the agenda. We had a recommendation. That the draft statement of accounts and the draft annual governance statement for the financial year ended the 31st of March 2020 are noted. Is everyone happy with that?
Yep.
Yes, I'm happy with that.
Good. Okay then. So okay, we'll take that as accepted then. So we move on to the next item on the agenda, which is item number 6. Which is the annual report for 2019-20, presented by Councillor Jory and Neil Hawke.
Thank you, Chair, and good morning, Chair, and good morning, members. You have in front of you a draft version of the annual report. The purpose of the report is to provide and make public an overview of our achievements as a council during the last year, to provide a narrative and background to the accounts, and demonstrate in an open and transparent way that we as a council are delivering services efficiently and operating responsibly. The purpose of bringing the report in front of this committee this morning is for you to consider the draft report, to note its contents. We're seeking any views on its contents, and to suggest any amendments that you feel would help and may be required. If I can just highlight a couple of items that are pulled out in the report. Firstly, as mentioned in the previous item, very pleased to note an underspend during the year of 133,000 against our previously balanced budget, and my thanks also go to the finance team for delivering that. So thank you to Mrs. Buckle and her team. We've also introduced during the year significantly a new contract with our waste collection contractors, FCC, which will bring a saving of around £2 million over the lifetime of the contract. That is now a joint contract with South Hams, and that in itself has led to further savings. I'm very appreciative of the team of officers who worked really hard and diligently on this, as well as a joint team of members and the joint board, which is now managing the contract. And also would like to thank the management of FCC for their constructive work and the work they've done in bringing the South Ham service within that service. Highlighted in the report is the effect of the COVID-19 emergency, which hit us towards the year end that we're talking about. The council itself has adapted quickly and continued to offer a full range of services, and had officers changing roles very quickly to suit circumstances, in particular delivering really large projects such as the business support grant that was paid out in very good time and very efficiently. I'd also like to highlight in this respect the community response to the COVID-19 emergency, which has been magnificent and in many cases has been done in conjunction with local councillors, town and parish councils, and everybody has really rallied round and pulled their weight. And if there's one good thing that comes out of the emergency, it is the response of our communities and the way that ordinary people have supported their neighbours throughout this whole difficult time. We as a council are now building on our recovery plan, and work is taking place at the moment toward that. But for now, I'd like to put in front of you the report to seek your views on that, and we'll be happy to take any questions and comments.
Do we have any questions? Councillor Yelland.
Just a very, very quick one on the first page of the report under the background at 2.1. It refers to local elections taking place in May 2020 and a new council being formed, unless I slept through something, and I know time doesn't mean a lot at the moment, but I think that possibly should read May 2019.
Thank you, Councillor Ian, and I think you are right. We'll make sure to get that change done.
Thank you. Goodness for that. I was going to do Lally. Thank you.
Yeah, well spotted on that one. The only comment I had really was on page 165. I think they're cogs. When it says times 9.3 average house price above annual average income, I wasn't 100% sure what that meant. Could that be explained to me, please, Neil?
My understanding of that is that if you took the average income in West Devon, the average price of a house in West Devon would be 9.3 times that average income, which is generally higher than elsewhere in the country. It's an illustration as to the difficulties of young people in particular, I think, getting onto the housing ladder, and I think brings into focus the importance of the community housing schemes that we're working very hard at the moment.
Okay, thank you. Right, okay. As Neil Hawkes decided, we will clarify the wording of that one in the final version. So thank you for that.
Thank you, Mr.
Hawke. Any other questions from anyone? Okay, then we have two recommendations on page 159, which are number one, that the progress and achievements made by the council be noted, and number two, that the West Devon annual report as presented at the Appendix A be considered for the financial year 2019-20, with any amendments being suggested prior to publishing. Is everybody happy that we accept those two recommendations?
Happy with that, Chair.
Yes, happy.
Happy.
Okay, thank you, Councillor Joy, for presenting that, and so that's all agreed. So we now move on to item number 7, which is a commercial investment property. Just to remind ourselves, we have to be careful here that we might end up going into part. We might end up going into part 2 if we start talking about individual tenants valuations or valuations of properties. So just be careful on that one. So, I'm handing over now to either Councillor Joy or Chris Book to present.
Thank you, Chair. I will talk on this, and I'll bring in the expertise of Mr. Brooke if indeed we need it. You have in front of you a report about the present position with regards to the council's investment properties. As you will know, we have made 4 purchases within the portfolio totaling £21.5 million. The net revenue, as highlighted from those properties, is £290,000 per annum, which is 1.3% of the investment amount, and is above our original target that we set of 1%. It's important to note that that revenue is taken after management costs, after maintenance costs have been put aside, and after an amount has been taken out for risk mitigation, which is going into a reserve fund. There are risks in the present portfolio. It's somewhat smaller than we had originally envisaged, and we are somewhat reliant on certain areas and one large tenant in particular. So one could argue that there is a lack of balance within the portfolio. But within that, we do have a spread of different areas ranging from Bristol to Plymouth, to Exeter, and locally within the borough, and we cover a range of office, industrial and retail units. I think there is an inherent risk probably in expanding the portfolio at the moment in present circumstances, not least because of the 1% increase in the interest rate that would be applied were we to borrow money currently from the Public Works Loan Board, which clearly does make a difference when one's looking at the return that we could get from any investment. I'm asking you to note as well that there is a particular risk point in 2028 when a number of different lease events come together. In particular, there are some break clauses that occur at this time and some leases that come to an end at this time. Details of that and a graph showing worst case scenarios are contained in Appendix 1. The revenue reserve at the moment totals £190,000, and that will obviously be useful and could be useful if we do get to a point where there are any lease voids. Our expectation and hope is that that revenue reserve will increase significantly by the time we get to 2028, which will allow us to deal with any problems that might occur at that time. Particular focus has been brought on the portfolio by current events and the difficulties that some tenants nationwide have had in obviously in paying their rent, and perhaps the expectation as to what might happen with the future of work and whether office spaces will be needed in quite the same volume that currently exists. In the appendix, as the chair says, there is some exempt information which would be covered by part 2, which has commercial sensitivity. I hope that is self-apparent and self-explanatory, and would add that at the moment we're not expecting any loss of rental, although that situation may change, and as landlords are being asked to be across the country, we may have to be pragmatic on occasions when negotiating with tenants. That's all I want to say, unless anybody wants to ask more detailed questions. As you say, we may have to go